Well, now to Apple, the world's most valuable company, will join the 119-year-old blue chip Dow Industrial Index. On March 19th, the iPad and phone maker will replace AT&T, which first entered the industrial average way back almost a century ago, 1916. Shares of Apple rose a bit while AT&T stock fell. Dominic Chu explains now what the shakeup may mean, if anything, for investors like you.
After years of waiting, investors will now get to see Apple as part of the Dow Jones Industrial Average. The reason for the index change is pretty simple.
Traditionally, the Dow is big, major, large, blue chip corporations, leaders in their industry sector and that kind of thing. And Apple clearly fits that mold. It is the largest corporation in the U.S., in fact, in the world. It's without question a leader in technology. It clearly fits what everybody's expectation is of a big blue chip company.
But if Apple goes in, another stock has to get kicked out. And this time it's telecom giant AT&T. That decision was a little tougher to come by.
Telecom is a bit overweight, and there are two telecom companies, and we felt we could do with just one, the other one being Verizon. And when we looked at the two of them, AT&T is slightly smaller and has a lower stock price. And those two items argued that AT&T should be the one that was selected. But it was a decision that we looked at for some time.
This move doesn't fundamentally change how either company operates or how it will operate in the future. But some investors note that there can be a silver lining for getting kicked out of the Dow. And others point out that Dow inclusion isn't all it's cracked up to be.
Historically, companies that have been put into the Dow versus those taken out has actually been a pretty reliable contrarian indicator. Going back through time, the Dow has tended to add the leaders, those that have been doing very well, and likewise it boots out the laggards. And as a result, maybe it's just a reversion of the mean, typically those names that have been removed have done a lot better than those that have been added.
As for what it means for the Dow, Apple has become the most valuable company in the world thanks to a huge gain in its shares. If that trajectory continues, that can help drive the Dow higher. So, what does Apple's inclusion into the Dow mean for Apple stock? Actually, not a whole lot. Unlike when stocks get added to the S&P 500, there aren't a lot of mutual or exchange-traded fund managers that benchmark to the Dow, meaning there won't be a flood of funds that immediately have to go out and buy Apple stock. However, if Apple's massive size means that its highest growth days are behind it, then it might not affect the index at all. For Nightly Business Report, I'm Dominic Chu.
Well, you might be surprised to learn that the Dow will actually be less tech-heavy once Apple is added on March 19th. That's because another tech company, and Visa, according to the Dow, is a tech company, it's a payments company, is splitting its stock 4-for-1. That cuts its price. It gets quartered. And because the Dow is a so-called price-weighted index, that means Visa and tech will have less influence in and on the Dow index.